All right, thanks, everybody. It's hard going at 3 o'clock when you guys have been at this all day.
You need to talk to the mic. If you want, you can. I can give you a mic and just walk
No,
around.
I think I'd like to move around.
Okay, so just as long as you're in the picture, you can look over there.
If I'm in the picture, okay, it looks like I'm in the picture. So it's hard, I was saying it's hard to go at 3 o'clock, but I appreciate the attendance we've got here at the end of the day. Is there any way to get drinks out for people, Marty? You know, because we're, the crypto world is a fun world, not quite as dry as some of the other things that we've spoken about. So we're going to talk a little bit about kind of where we are today. Marty alluded to some of these things, and kind of what our outlook is going forward. I just finished writing our monthly letter that we sent to our one of our hedge funds client list, and what I had actually said to the content guy is, what I really wanted to do is send the shortest letter that we've ever sent, which I just wanted to send out 2 words. I wanted to send out buy low, okay? Because this is the most pro-cyclical market in history, which means everyone gets really excited when it's going up and everyone gets really terrified when it's going down. So everybody has a tendency to invest at the wrong time and to panic at the wrong time. And we're going through a little bit of a moment here where we had some liquidity issues that relate to a couple of exogenous events, very similar to what happened in 2022. And basically, in the longer piece that I wrote to send out, I pointed out that basically this feels a lot like today, like what 2022 felt like, which is where external events that don't affect the fundamentals are causing technicals to deteriorate, but technicals don't persist, fundamentals do. So we're going to talk a little bit about some of the regulatory developments and the changes in public policy. We're going to talk about stable coins. We'll explain what that is and why they're so important. And if we have time, we'll talk about one of our portfolio companies. So we can go to the next slide, Marty. So Pantera was actually started in 2003, and in 2013 was repurposed to become the first crypto manager in the United States by creating the first fund for crypto investments in the US, which was a Bitcoin fund. And when we started, Andreas, it was $65. So Dan famously sent out an email to some of his close friends and family and investment colleagues and said, it's kind of time to start the fund. We think it's a little high at 65, but we're going to get started. So I believe that our Bitcoin fund is the highest performing fund in the history of funds. It's ridiculous. So at this point, we're about a $5 billion manager. We have 259 portfolio companies, and a lot of you are saying, wait a minute, I thought you were in crypto. What's a portfolio company? So, but we are really primarily are venture capitalists. Bitcoin is a little tiny part of what we do, and it's really a little tiny part of crypto. And sometimes it feels like when you're in our industry, people kind of assume that they're one and the same. And the best way that I could describe Bitcoin, its importance, is really what Bitcoin is the proof of concept of the type of systems that are being utilized throughout crypto to do many productive things. And even if Bitcoin doesn't actually produce transactions and revenue in the way that other crypto projects do, Bitcoin has been up since 2009. It's had 23 versions of the software without anybody in charge. It's never gone down. It's never been hacked. It's done over 1 billion transactions. So the scale and the security of the Bitcoin network are utterly astonishing when you think about the way that it started. So most of what we do, though, is really about applying this technology in other places. You go to the next one. So as we were leading up to the election, I have a feeling, that our president, who seems to be fairly an intuitive person, not a deep thinker, no politics here, but I have a feeling that at some point somebody said to the president, Mr. Trump, it appears that 50 or 60 million people in the United States own crypto, and they really like it. And there's nobody who is on the other side. So, If we say we're pro-crypto in an election where we think 10,000 votes here or 10,000 votes there might win the election, maybe we could win the election. And he said, 50 million holders, I'm pro-crypto. I have a feeling that was the entire conversation. So in May, Trump becomes pro-crypto, and really it's hard to describe. It's described there as a pivot, but it's hard to describe how negative the industry was being treated, how negatively the industry was being treated by the government as we got to that moment. The amount of enforcement actions that we were seeing from the SEC, just the, as Mark Andreessen has been speaking about, the debanking of people in the industry. The amount of pressure that was on us through really means that were kind of extra legal. They weren't even clearly legal. It was astounding. And the extent to which innovation and participation in our market had been limited by that negativity, it cannot be overstated. So this is an incredible moment when somebody who at least seems to have a fighting chance to become the next president says, I actually like crypto. A whole series of things start to happen after that. Including, some action in Congress. And we get up to actually where we are today, where we now have the industry was not very well organized. That's part of why it found itself in the sort of political situation that it was in. And going to this election, the industry became very well organized and did a really good job of identifying in a number of congressional races who were the candidates that were going to be more friendly to our industry and who were the candidates that were going to be less so. And basically, I think we had an 85 or 90% winning percentage in about 60 odd races where the industry was making donations, including, in Ohio, where the extraordinarily negative Sherrod Brown was defeated by a guy who actually had made money in crypto and sold a crypto business. So we've not only turned over things at the top, but we have also very importantly turned over things in the legislature, which is really where all the action is about to happen. So you can see basically the SEC has started to dismiss a number of cases. We can go to the next slide. Nope. Is that all? Okay, I can go back. We'll stay on this one. So you can see basically all of these very well-known entities that were under pressure and were being sued by the SEC have basically had their cases dismissed. Now, I actually, you can tell I'm not, 26-year-old guy with pink hair and a t-shirt, right? So I'm not actually the sort of standard crypto person, and I actually have lived in the regulated financial world my whole life. So I'm not allergic to regulation, and I actually see the purpose of it. And the fact is, the SEC in a lot of cases had legitimate gripes about some of the activity they saw in our industry. The problem is they didn't have any authority to do what they were doing. And all of these companies, in one way or another, were constantly going to the authorities and saying, please tell us how to be compliant, because nobody wants to live under the threat of enforcement actions and legal actions. We just tell us what we need to do. And there was never an answer other than, no, the rules are already written. They're written for equities. They're written for commodities. Figure out which ones apply to you, and tough luck. So the fact that this first step here where we're dismissing all these really outrageous actions is going to help extraordinarily. There's a lot of conversation about a crypto strategic reserve, especially about Bitcoin. It makes a lot of sense if you look at the historical performance of Bitcoin relative to gold. If the United States has some unknown amount, apparently, of gold in Fort Knox, it probably makes sense for the United States to have some Bitcoin where actually every citizen would be able to see exactly how many we have, rather than wondering how many gold bars there are. It makes sense, given that Bitcoin is essentially digital gold, that it would be good policy for the United States to have a strategic reserve. And there's a lot of expectation that at least, at a minimum, the government will stop selling whatever crypto it seizes in various formats. On Friday, there's going to be a crypto summit. It's very significant to note that there is a crypto czar who happens to also be the AI czar, David Sachs. And, he's extremely knowledgeable about our industry. And, right now, certainly in the investment world, one of the best things that I can say about our venture activities is that there's a shinier object than crypto out there, which is called AI. So a lot of investor attention, a lot of the generalists who would normally be fighting their way over to our space when it starts to have some momentum, are really too busy right now chasing AI related stuff. And it actually creates a really good investing environment for us. But the fact that the cryptos is both the crypto and AIs are tells you how seriously the government is taking this opportunity. And obviously, the change in the regulation in the United States affects more than just the United States. If you are any kind of an international financial institution, and the United States is basically saying that US financial institutions can't touch these things, can't custody these things, can't hold these things, can't trade these things, can't bank these things, it becomes a pretty difficult environment for not just US institutions. And we are about to get basically a very simple set of rules, well, a very straightforward and complicated, but straightforward set of rules that will essentially tell everybody how to be compliant. And as I said, you cannot underestimate the effect that that will have. If you look at, we've used an analogy many times. When you look at the first, at Web 2.0, which was essentially the commercialization of the internet that happened between the dot-com bust of 2000 and basically that ensuing decade. The dot-com bubble bursts, and it takes 6 or 7 years before we see anything commercial that really gets to any scale. The iPhone, Facebook, these things don't come out right away. They don't come out in 01, 02. They come out in 06, 07. And basically, in a lot of ways, we could see the use of the internet, of that version of the internet, but it didn't work. Like everybody here, I see enough people here who remember when they went up on their computer and they got a spinning wheel when they were trying to use the internet. It just didn't work very well, and it didn't have the capacity to handle what we could imagine that it would handle. And in a lot of ways, where we were, a year or two ago was very much akin to where that version of the internet was, 25 years ago. And what has been going on for the last few years is the building of the infrastructure to enable this version of the internet to deliver. But we couldn't actually do anything until this piece got solved. So the combination of all this infrastructure building that have been going on consistently, and if you ever go to a conference where you see entrepreneurs in our space, one of the most amazing things you will see is they don't care the price of anything. They have a vision in their mind of what they're going to build, and they're building it. And if Ethereum's at 4,000, great. If it's at 800, great. They're just working, and they think they're going to create something of enormous value. And that has been going on through all the volatility that you see in the marketplace. That has been going on. So the combination of that improved infrastructure with this improved regulatory environment that should be coming very soon is massive. We're going to get two laws passed this year. It's what the politicians are promising us to give guidance so the SEC can enforce actual law instead of made up law. And we're going to get a rule about something called stable coins, and we're going to get a rule about generally how the market is supposed to operate. And let's talk now about the first one of those, which is stable coins. So what is a stable coin? Does anybody have any idea? Does anybody want to give me a definition of a stable coin?
Tangible assets.
So Stephen said it's a token that's backed by tangible assets. It can be backed by tangible assets, but the basic idea is it's a coin that has a value that doesn't change. It's stable. So can anybody else think of something that's always supposed to be worth $1? Like
Market fund.
Oh, a money market fund, right? And I think only one time has like a major money market fund broken the buck. Basically, it works pretty well. You put a bunch of treasury bills in there, and you kind of generally have something that's worth $1. So the world, like so many things that are going on in crypto, they sound like they're really new and scary and different, and there's voodoo. Basically, what most stable coins that are backed by something tangible are going to be backed by is something that looks a lot like a money market fund. They're going to be backed by a bunch of treasuries to enable the thing to be worth $1. So why do you need a token that's always worth $1? Why is that useful? Because the only thing that's been missing from cryptocurrency since Bitcoin was invented is currency. See, cryptocurrency isn't money. And I'm not really sure how the word cryptocurrency got into the vernacular and became the definition of what we do. But cryptocurrencies aren't currencies. They're not currencies in the way that the dollar, the euro, the yen are currencies. They're currencies in the way that Amazon stock is a currency. Way that inside of Amazon, they might use their stock as a way to incentivize service providers or employees. It might be currency in the way that they might use it to acquire a company. But it's not like anybody goes on Amazon and pays for their groceries with Amazon stock. And the right way to think about most crypto is the currency is basically the fuel for a system. It's currency inside of something, but it doesn't leave that and have a sort of a use as money outside of that system. So we'll get into that. But basically, why are people interested in the United States government in being supportive of something as arcane sounding as a stable coin? Well, the dollar has been losing market share over the last couple of decades. And if you're the United States government, you really like the idea that, you know, one of the sources of our power is the fact that our currency is the reserve currency of the world. And if you look at when Bitcoin was introduced, I'll go into the other one so I don't leave the camera. If you look at when Bitcoin was introduced, right in here, okay, you're already, as a policymaker, seeing a reduction in the dollar's primacy. You're already worried about that. And now somebody comes along and says, hey, somebody just invented something that's a threat. Somebody just invented something that's going to replace you potentially, that people who would otherwise hold dollars are going to say, I would rather hold this new made up electronic currency thing. And if you're the government, oh, and by the way, they're going to be able to transact with each other without you knowing. So that doesn't sound very appealing, right, if you're the government. So that's what creates all the negativity that we've basically been dealing with from 2009 to now, is that if you're the government and somebody says, I'm here to kill you, you kind of don't want to be that friendly to them. So let's go to the next slide. So what happens? Bitcoin was invented as a peer-to-peer cash system. It wasn't invented to be an asset. It was invented to be a means to move value. And what you were going to move was the Bitcoin, right? That was what you were going to move. But the purpose of it, Bitcoin, a peer-to-peer cash system. The idea was we're going to use this system to move value. It evolves very, very quickly into a store of value, just like gold evolved from a means of exchange. You know, most people walked around the world, they had a little gold coin in their pocket, they could buy something. And up until the 70s, the US dollar was backed by gold. Gold was a means of exchange for a long time. Why was it so useful? Because there was sort of the right amount of it. It wasn't totally common. It wasn't totally impossible to find. And it had all these great physical qualities. It doesn't rust, it doesn't dent, very difficult, you can't break it, you know, and sort of sounds a lot like the system that I described before, which is Bitcoin, which has a fixed cap, which has never gone down and never been hacked. So a lot of the sort of qualities that gold had, digital gold has, and digital gold sort of, Bitcoin sort of evolves into this store of value. So it isn't money. But all the things that we said, that Bitcoin would do for you, that it would free you from your, somebody was talking about, Marty was talking about lousy currencies, right? Being in some country where your currency exposes you to a tremendous amount of devaluation risk and other problems. Well, it turns out, as one of my colleagues in the industry said at a recent conference, maybe the killer app of crypto is the US dollar. Maybe a stable coin that's backed in US dollars is going to be what allows people to move money more quickly peer-to-peer than they can do it today, just like Bitcoin was supposed to do, and allows people to get free of whatever their other problems are, their other currency. Right now, if you live in Brazil, you can go into a bank and you can buy $200 worth of US dollars with a yield through a stable coin. Before that product existed, that Brazilian person had to have 10 or $20 million to get access to dollars. You had to have a private banker. You had to go through all sorts of, great effort in order to get your hands on US dollars. But through stable coins, you basically have the ability to get your hands on dollars. Now, when you think about this and you add this all up, why was the regulatory point of view of crypto starting to change even before the election? It's because the re-dollarization narrative became clear. That to the extent that this technology and stablecoins backed by US dollars would take hold, it actually would be great. You could take that slide we were looking at before and take that line that's been going down for 25 years and make it to start going up. So it turns out that crypto has made a 180 from where we started. And instead of being a threat, we're now the sales force and the distribution arm, basically, of the US government. You know, over 99% of the stable coins that exist in the world are backed by US dollars. So this is a very, very, very important thing that has happened, because what stable coins will allow is the application of blockchain technology in a whole variety of ways and the moving of value. When everyone was always like, we could pay for things with crypto, it's like people don't pay for things with Cisco stock or bars of gold, which is basically what Ethereum and Bitcoin are. So it never really made a lot of sense to me that people thought that these things were going to be money. But now that we have money, now we can start to disintermediate all kinds of different processes and different intermediaries by going direct and having much less friction, much less cost. Sorry, you have a question?
Wasn't Mt. Gox a Bitcoin hack?
No, Mt. Gox was hacked. The Bitcoin system itself has never been hacked.
How did they steal the Bitcoin?
Well, if you get into somebody's wallet and get their, get access to their keys, just like breaking into any system. If you break into somebody's system, you could take their stuff. One of the questions that often,
Get the keys.
one of the things that often gets asked is, what happens if quantum computing breaks Bitcoin? And the answer is always, if that happens, you have so many more problems that Bitcoin won't be your problem, because they're going to hack JP Morgan way before they hack Bitcoin.
Which they probably have already.
Well, which they do, I think basically every day, if you look at how the website goes down. So, but the serious answer to that question is that most people believe that with all these things, the offense and the defense get smarter and get more sophisticated at the same time. It's not like the offense is just going to be asleep. We go to the next one. So basically, this just summarizes why stablecoins matter. Essentially, though, the real bottom line here is we're going to give access, very fast access to the dollar to lots and lots of people in lots and lots of different kinds of environments who wouldn't have had it otherwise. We go to the next one.
About 5 minutes.
Okay, so this just shows you the growth in stable coins. So you can see that really before 2020 they were almost non-existent. We had one of the three kind of exogenous events that really hurt our market in 2022 was the failure of a stable coin that wasn't backed by treasury collateral or any other collateral to an extent. So that was that spike was when those first stable coins were out there that offered crazy yields and they were basically scams. And then we went to work on building actually fundamental sound stable coins. Next slide, please. You know what? We only have a couple minutes left before I keep going on. I just want to see if anybody has any questions. Yes, please.
Explain further treasuries in relation to stablecoin, especially given the fact that treasuries can fluctuate and treasuries are based on the credit worthiness of the United States, which if our credit worthiness decline, we'll see what happens if it continues, then that has to affect currency. Our currency, reserve currency, number one.
It's kind of like that line that somebody once had about democracy. It's the best bad form of government, ever invented or something. The dollar at the end of the day and the US credit are the top of the heap. So if the US falls apart, I don't want to even think there's not going to be like another current country to go into. If you're really worried about that, there's this thing called Bitcoin that I got for you, okay, that you're going to like a lot. If you really think that the whole sort of organized financial system is going to collapse under its own weight, then that's kind of what Bitcoin was built for, to hold on to your value for you. But as far as the kind of in the realm of more sort of lower volatility possible events, there's lots and lots of countries in the world where being able to hold my $1,000 in US dollars instead of in my local currency is going to provide an incredible amount of value.
Yeah, but I would turn around and say, why not take all the currencies in the world and make them transferable into cryptocurrency or Bitcoin? So you
Well-
establish Bitcoin as the reserve currency in essence, and everything trades relative to
Well, the problem is
Bitcoin.
that Bitcoin is too volatile to be useful for a transaction. So it's not really it's not money. We don't use volatile things to transact because very often the amount of money that we're spending,
Change. Volatility.
people have been predicting that the
Let's go to the next
volatility would
question,
drop
next
for a
question.
long time. Yes.
So our fractional reserve banking system, I'm trying to compare the two.
Yes.
So a
This is an
bank,
unlevered bank.
no, there is no such thing. as
No,
an unlevered
a
bank.
stable coin
Okay,
issuer-
yeah, that you see where I'm going.
A stable
You
coin
see where I'm
issuer
going,
is an
okay.
unlevered bank. It's,
But
yes,
Federal Reserve says my bank needs to hold $5 or $10,
Right.
every $100 they put out. What is the parameters for a stable?
has to hold $100.
Dollar for dollar.
Yes.
More questions?
Yes.
When you brought up quantum, I was thinking the exact same thing. And then you brought up offense and defense, and that's exactly what's happening. Countries and banks are trying to get ahead of it, right? What organization would be getting ahead of the potential for quantum to sort of violate or break the code?
So this is the real mind blower about Bitcoin, right? I said it's had 23, I think, versions of the software, but there's no CTO. So there were all these different upgrades all along the path that needed to be done. And you sort of say to yourself, well, how'd they ever get done? Like, who figured that out? And the beauty of these systems is they operate by the community. They're kind of communes, right? Where the community has a shared interest in the continued well-being of the system, and the community contributes their labor and their efforts to continue to make the thing work, because everybody who owns a Bitcoin, all the miners, all the validators, they have an incredible amount to lose if Bitcoin somehow got hacked, right? So I just want to add one other thing before I get the big hook from Marty. So we have, as you saw in the thing, we have about 5 billion in AUM. Starting at the end of June, we are going to be launching our 5th venture fund. It'll be probably open for about a year. We're shooting for about $1 billion. And the last fund we did was a $1.2 billion fund where we started out looking for 600 million. We offer a very standard looking venture fund that doesn't really buy any tokens. It just buys into private tokens, private companies, but doesn't buy anything that's volatile right out of the gate. Or we have sort of all-in-one product that includes both currently trading tokens that are pretty volatile as well as private investments. But if anybody's interested, you can contact me and I can get you more information on that.
Did we have any other questions? Did you have a question? No? One question I had I think on your first slide, you talked about 22 unicorns. How did you exit?
So the beauty of one of the great things about crypto is that the token is part of the business. So in the real world, if you're going to exit something, the company has to basically start executing on their business plan to an extent that the fundamentals suggest that there's value there, and then you can either sell it into the public market or get it acquired. The great thing about investing in crypto is you have to release the token into the world because the token's part of the business. So the tokens start trading even before we find out whether or not the business is going to work. So when we have an investment in something that has a token, we have visibility in terms of the success of the project and how it's evolving. So it's much, much easier to exit venture investments that are held where part of what you get is a token than it is when you have to exit traditional equity.
Fantastic. Great job.